want to bring in former Dallas Fed president and CNBC contributor Richard Fisher. Hey, Richard, how are you doing?
Morning. Well, I'm a happy guy. We beat the Seahawks last night. I was at the game, and I was delighted to be with one of the great actors and the producer of Yellowstone. So
Really?
We had a good time. Yeah, stayed up late. I was
Kevin Costner?
Beth was my seating
Tyler
partner.
Sheridan.
Oh, Tyler Sheridan.
I'm assuming Tyler Sheridan.
He was there. He's there at almost every game now. And I sat with Beth, the actress who is so wonderful in that show. Anyway.
Yeah.
Did you get any hints about, is it now going to be Matthew McConaughey? Is that, can you tell us anything?
No, you have to stay tuned there. You know that.
I could tell you, but then he'd have to kill you.
Tyler Sheridan has a new series out.
He is a remarkably talented man, and he always comes together in a cowboy hat.
He was doing that Sly Stallone one too. This one I can't remember this one, but
the one in Tulsa?
Western. No, yeah, that's him too.
About Tulsa, yeah, he's a great guy, and she is absolutely wonderful. So it was a good night.
Bass Reeves, that's it, right? Yeah, Bass
Reeves. Cheering for the Cowboys, and we won. We beat Seattle. We didn't think we could, but we did.
I know. I should have taken the points.
All right, Richard, why don't we talk about some more boring
serious stuff? Okay, let's talk serious.
Boring stuff, but stuff that really matters. Look, we had Ian Shepherdson on earlier today, and he thinks that the Fed was too slow, I think everybody does, in terms of raising rates. They underjudged inflation as it was happening, but he thinks that they are underjudging disinflation on the way back down. Do you agree with that?
Well, the core rate is still above 3. I don't think they're going to do anything in December. I wouldn't advocate for it were I still there. And I think they've done a pretty good job. Again, everybody loves to criticize Powell too much, too little. He made a mistake in the beginning. We talked about this so many times on the show, embracing the transitory inflation argument the staff fed to him. And they pulled this off without destroying the economy. Manufacturing is in recession, no question. But you just had a good little segment on Austin. You know, the Dallas Fed gives me a monthly report still. And our economy here in the third quarter grew at over 5% in every single sector. So you have growth here, you have growth in Florida and Utah and so on. We're still consuming. And we saw some big numbers on consumption still that were just reported yesterday. And yet we're slowing down. There's no question about it. People aren't hiring as much. They may not be laying people off as much. But there's no question we're slowing down. And that's the intent of the Federal Reserve, to keep rates at a level that slows down, takes off the inflationary pressure. And so far, they're doing a good job. I have no problems with it.
It's not about criticizing the Fed as much as trying to look at the breakdown between what the Fed has been signaling and what markets are interpreting. And the markets at least seem to be getting ahead of things again. You see the kind of the collapse in yields recently. Which do you think is right?
Well, as we've said before on the show, the long-term Fed funds futures market is never correct. And right now, if you go way out there, they're pricing in a constant rate above 4% out 5 years and longer. The yields have come down significantly. The real question for me is not the Fed here. It's the auction schedule of how much and who is going to digest over $800 billion in offerings of the U.S. Treasury and the weekly Treasury offerings in the first quarter. But it's been impressive. I mean, whether it's the 1 year or the 2 year or the 10 year, we have seen a big rally in the bond markets. And so those that took that bet instead of piling into stocks, or like to say the Fortune 493, which haven't done as well, or the S&P 493, they've made a good move. Question, is it likely to be sustained given the auction schedule? And we'll see.
But you think yields are going to rise in the first quarter because you don't think that there will be buyers, that rates will automatically have to buy just to get buyers in for all the treasuries?
Becky, I'm just asking the question, who will buy it and at what price? And we have huge amounts.
But you're asking a provocative question. I wonder what you think the answer is.
Well, I'm kind of agnostic here. I do think we have to remember rates are going to stay above 4% for a long time. That's a huge move from where it was before. We got and we talked about this. I thought the 10-year Treasury would go to 5%. It did momentarily. Everybody freaked out. And since then, rates have rallied, or prices have rallied, rates have come down. But I still think you have to remember we're at 4% plus. And financing the U.S. government, which has a cost of carry in the high 2s right now, and refinancing over the next 3 years, a significant amount of, I'd say over half of U.S. Treasury debt is going to drive up the cost of debt for the United States government, cost of carry, almost to double what it has been. So we'll have to see if the bond vigilantes come out. So far, they haven't. And that's, I think, the real test in the marketplace.